Okay, it's Tuesday, August 27th. We're going to review the trades from the chat room. These were trades that were called out live in the chat room. We're looking at the pound yen first of all. The pound yen started to move just about the time that we also identified and talked about the trade on the pound dollar. I'll show you the pound dollar in just a moment. But so sometimes they'll work in unison, other times they don't. Today was pretty obvious that it was going to. Looking at the larger time frames, we're going to take a look at the larger time frames as well just before I end this session here. So this will serve as an update for chat room members that were either in the chat room for part-time or didn't make it in at all. So this is a recap. Again, pound yen 1 hour time frame. So if we go to a 30-minute chart, this is something that I do regularly in the chat room. I'm going to go through between the 30-minute and the 1 hour chart. And sometimes the 30-minute chart, it'll give me a signal, and sometimes it won't. Sometimes I have to wait for the 1 hour chart to close and confirm and give me the opportunity to trade it. In this instance, it was a relatively easy trade, but I did wait one extra 30-minute candle until I got the 1 hour chart to give me the signal, which is right here. So again, it shows the same basic pattern. So the entry that I called out was 129.53 was the entry. And then the first target in a situation like this, and we talk about this all the time, what would be my target? Well, in this instance, I had a low and a high. Well, we could have started off with this one or maybe gone to the overall. There's a couple of different places to. Sometimes when it's not as clear, you want to move it around a little bit and try with a couple of different ones to see if something lines up and looks a lot more obvious at that point. Sometimes it does, sometimes it doesn't. And then other times it's a very clear low and a very clear defined high, and it's very obvious as to where you need to put your Fibonacci tool. So here we have the 618 retracement and then the bounce. Now obviously if this is going to continue in an uptrend, then our extension target would be back up here above the 131 level. But I don't know that that's what this is. This, if we tighten it up, we're still in a relatively overall range of consolidation. It's been moving up a little bit for the last couple of weeks, but overall, we're still inside of this range of consolidation. So until it's actually a true, clean, clear breakout to the upside, I really wouldn't expect a whole lot from it at that point. So I need to take pieces of it. Now, if I'm going to take pieces of this move, then that's when I start looking at the psychological levels. Because the extension target, I could hold for a couple of days, but I'm not going to, and then see what happens if it actually does eventually break out and go to that extension target. But we're day trading here. And when we're day trading, we've got to find realistic profit targets. And again, realistic profit targets, those are the profit targets that are most likely to be hit within maybe one session, the current session that you're trading, or maybe the next one. We don't want to confuse the two, that we're getting into a trade expecting a day trade outcome, again, where the price will hit its target relatively soon, as opposed to a swing trade that takes 2, 3, 4 days. I don't want to get into a trade like that. It's a different strategy and different structure altogether. So this is a day trade, and if I'm not going to hold, obviously, for that extension target, and I'm not too sure, the time that I would use the extension targets in the ABC price method and hold would be if I find a setup on the daily time frame in the 4 hour. Now, I point those out in the chat room when they develop. I do talk about those and point those out because I do have some chat room members that are swing trading. They want to look at trades on the daily time frame. So I do indicate that I found one, or one is likely to set up, that kind of thing. And then I call it out. Of course, that would be different than the take profit levels that we're looking at here. Again, for day trading purposes, from the time I get in at 53, the first level is a psychological level. That's what I'm going to trade it to, which is 80. And then the next level after that is the 00. Now, I closed and called out the 1.30.00 level when it approached that level, and I said, I'm flat this pair. I'm flat. I know that it could probably go up maybe another candle or so, but at this point, this was a pretty good trade getting in at 53 to the 00. That's approximately 48 pips. I'm locking in profits here. I'm done. I'm flat. I don't know how much further it's going to go. So the next level, and I did mention this in the chat room, I said if you're going to hold on, or if you've got more than one lot, the next level would be the next psychological level of 20. And some of the chat room members did hold for an extra 20 pips. But I'm just going to record this one here as 48 pips. That's what I did. That's what I called. That's when I told everybody I was flat that pair. But I did provide instruction on how to trade it to the next 20 pips. And I stay in the chat room. You know, there's questions obviously after that. And I stay in the chat room. I don't like disappear after I close out my trade and then leave everybody to their own, you know, to try to manage the position that I am mentioning, you know, a final target on. I'm there to help everybody. So this was 48 pips. The other trade was the pound dollar. This is the trade this morning. So the entry at 75, and it did pop up to the 00. It went as high as 8. So 20 to 25 pips is usually what we're going to target when we get into a trade like this. And I'm not too sure if it's going to reach its 55 pip take profit level, if it's a breakout, which in fact it was not. I'll show you what this actually was, what caused me to get into this trade and why it gave me the signal and the trigger. So 75 was the entry. Normally I trade it to the first 20 pips approximately, which is 95. But in this instance, this was a trade that set up on the daily time frame with that continuation breakout trade, and at that point it looked like it was going to go a lot further. So we held for the extra 5 pips, the 00 number, and then the next target would have been 20, and it didn't hit that. So we scale out at the first 00, which is where I recommended, and then we set the second half of the trade at a break-even stop, and when it comes back down, if it hits the break-even stop, then we close the second half of the trade at 0. So we still locked in 25 pips on this trade in the chat room. It did not hit the final target, and it might eventually come back up. But again, I say this all the time. If you can identify that price isn't moving very fast and it's not likely to move very far, meaning that it's not likely to hit an expected take profit level, then the way I look at it is I would rather lock in profits and be done with this trade and then go rest, right? That my trading day is done at that point. If I can tell that it's not going to reach that final target and it's going to move over sideways like this, why sit through 10 or 11 hours of very, very small price movement, just waiting and waiting and waiting, and then wait until, you know, the London market opens up, hoping that it's going to create another opportunity where there's more price action, and then maybe squeeze out a few more pips. Sometimes that's all that you get is a few more pips. So what I'm getting at is, if you're going to be putting in 18 to 24 hours watching a trade, and it's already hit its targets, and you're up, you know, 25 pips, there's nothing wrong with that. There was obvious signs that this thing was slowing down once it spiked and hit 8, and it wasn't going to go any further. Let me go to the daily time frame, and I'll show you the actual setup on the pound dollar. So the total today was 73 pips with these two trades called out in the chat room. This is the pound dollar daily time frame, and this is that strong bullish continuation breakout trade above resistance. This is the daily time frame. And then we had, this was on last Thursday, there's Friday, and then here's the, you know, Monday pullback, which was just back here to the level that it broke out of. And then it bounced and started to move up. And we talked about this when it was happening this morning, that it's possible that this could be a bullish move and it could go a lot further. There would be our extension target at the 1.2430 area, right around there. It still could possibly work out that way. And I mentioned that we had a long way to go from this morning until this candle closed. This candle is closed now, and it's still a bullish engulfing candle with a retracement off of the support level or the old resistance level now acting as support and a bounce. So this could be a possible Tech 1 trade to indicate that price might go higher. There's a couple of different ways to trade this if you're swing trading this. Obviously, we make a new high, we expect a little bit of a pullback. So one of the ways that I could trade this is to get back in at the appropriate entry with the continuation breakout trade, or wait for the high of this candle, this Tech 1 trade candle, to be taken out, and then watch to make sure that the trend is going to continue for the day. Otherwise, it's probably likely that it's going to retrace, bounce around, maybe move around for a couple of days. And I mentioned that this morning, that even if we get a strong bullish candle, it may take a couple of days before it picks up momentum and takes off again. And that's for obvious reasons, right? We can go back down to the 1 hour chart, and it's still in a relatively tight range of consolidation. There was that move here this morning, and it was a trade with the daily time frame signal, but overall it's still inside of this consolidation range. And if we go to the let's go to the euro dollar, Euro dollar, dollar yen. Here's the euro dollar. It's still sliding lower and lower, like I was talking about on Monday when we started trading after this reaction. I mentioned that it was probably going to go lower back down to this mean level, which is a level that it started off at. And it is making lower lows, but it's taking a really long time. And this is the type of activity that I try to avoid. The longer it takes, the more hours my trade is open, and the more hours that pass, the more susceptible my trade is to a tweet that could cause a spike in the opposite direction and then it drops back down again. Something like that, because I still have to figure out where my stop loss is. I know where my take profit would be, but I've got to use an appropriate stop loss. And my opinion, and I said this for the last 2 days, is that I would rather trade off of that support level or off of resistance. It's going to be a lot more obvious. Or something more obvious inside of the middle of this range of consolidation sets up, maybe with some U.S. economic data, and I could trade one of those 1 hour trades. I won't get into detail. I talk about that in the chat room. I'm not going to get into too much detail as to what that means. It's a 1 hour trade that usually lasts with economic data, and then the next candle, and then it's done. At that point, it stalls. It's pretty much what happened on Friday. So that happens on a pretty regular basis when the market's in a more normal trading environment, but that's not what we see here. This is really taking a long time to move, and it's just not covering much of a distance. This is the dollar yen, and you can see for the last 24 hours, it's just been in a really tight range of consolidation. So again, I'm not going to trade this because it just takes a long time for price to move anywhere. And again, the longer it takes, the longer I'm in the market with a trade like that and it's not going anywhere, the more susceptible my trade is to some kind of a reaction where the market is quickly moving on some tweet or comment. And then lastly, we'll take a look at the dollar Swiss. Same thing with the dollar Swiss. It's just it's not really doing anything at this point, so I'm gonna have to wait a little while. I don't know that I'm gonna get another signal during the London session, and but most likely during the New York session. Usually that's when I get pretty good opportunities. I can't promise anything, but that's when we got these trades here with the pound dollar. So again, 73 pips today in the chat room, and hopefully we'll get a little more activity. It is possible, you know, just to set everybody up and their expectations so that they're aware. It is possible that price can continue to move like this for the rest of this week. It is just a possibility, and we have to prepare for that. So, again, and I believe there was one other trade on the dollar Canadian. Yeah, it was a Tech 1 trade off of support. This was the Tech 1 trade off of support. So this is really similar. It was a similar pattern, but not off of the previous week's low. It was a similar pattern to what we traded on Friday. So this provided us with another 48 pips here. So 73 pips on the pound and the pound yen, and then 48 pips here on this trade, which was a Tech 1 trade. So again, at this point, I'm flat. I'm done with everything, you know, that I would trade at this point. This was actually the psychological level. This is not the chart that I called out the trade on, but there's that psychological level that we traded it to, and it hit it right on the number. 99.9. Somebody else said that they saw 33.01 half. So it really depends on your broker what it looked like on that spike, but it did hit that final target. They don't all hit the final target and then stall like this. This was like perfect. Again, sometimes we will take profits just before it hits that final target, but you got to be really careful with it. So at this point, looking at the, I'm going to go to the HL30 page because I keep getting questions if the HL30 is, if we should be trading it yet, and I still don't think it's a good idea to trade the HL30. Sometimes they'll work, and sometimes they won't. The pound dollar HL30, that worked, but they don't always work. And you know, if you trade the HL30, this rule here, one of the other reasons why I would have stayed away from trading a bounce off of yesterday's low is that the previous day's low is sitting right here. That's Friday's low. And sometimes when you get an HL30, it'll move up a little bit and then turn around and go back down, test the overall low, and then bounce. And that move right there, that behavior, could stop me out prematurely with the 20 pip stop loss. So that's why I'm not using it. Here it did work, but then we still got that trade here at the end, which was off of the daily time frame. And it turned out to be a good trade regardless. I mean, it was still a good trade.